in isolated market. This session will run for 1 hour and 15 minutes. We're going to follow by the question and answers from the audience. Please, I will encourage the audience, if you have any questions, please just put it on the chat box and the speakers will attend after the event. I will now hand over to our host who will guide us through the rest of the program and also will introduce our speakers. Thank you, and over to you, AS Yunusa.
Okay, thank you, Halima. We are welcome again to another edition of RAB. First of all, I have to wish our Muslim faithful happy Eid Mubarak to everyone. I understand the moment of the season, but we still have to do this to keep up with the momentum of our discussion, because Africa cannot be great if we will not dip into our time, inconvenience ourselves, and do what is necessary. And I'm glad to have every one of us on the call today. I can see you, my brother, Mr. Alexander. We greeted earlier. You are highly welcome. Mr. Dapo as well. I can see you are highly welcome. Before I start the communication proper, so I just want us to watch a little clip from the richest man in Africa, Aliko Dangote. So I want to play a clip, then we'll watch it. It will be an introduction to the theme of this discussion so that we can know and understand the importance of what we are here today to discuss and the significance in African landscape generally. So I grab your indulgence just 2 minutes to watch the clip.
Somebody like myself, I need tax 8 visas to move around. How do I now invest if I'm not able to move around and do tax 8 visas? It doesn't make sense. Nobody has time to go and somebody like myself, I need tax 8 visas to move around. How do I now invest if I'm not able to move around and tax 8 visas? Doesn't make sense. Nobody has time to go and apply for a visa, take your passport, and whatever. And most of them, they don't do visa on arrival. So we look at that one, free movement of people, free movement of goods and services. These are critical areas. Without this, there's no way we're going to have a very prosperous Africa. You know, because with this, I cannot move my goods from Nigeria, from Lagos to Republic of Benin. And when you try to cross the border, you can be there for a week if you are lucky. If you are not lucky, you don't know anybody, you're going to be there for 2 weeks. There's no way you can do a trade with your neighbors like this. Then when you look at the sector of transportation, when you look at it, most of the people who own ships that move goods around, they're owned by other nationalities, not Africans. And it costs us, for example, to go from Lagos, port to Accra, more than coming from Spain to Lagos. Then you talk about aviation. When you talk about aviation, from Lome to Accra, somebody would like $600. You know, I mean, $600 is a lot of money.
Okay, thank you very much for watching. I believe we have seen, we heard it from the richest black man in Africa. So if he can feel the pain of the subject of today, talk more or less we that are operating far lesser than him. So to facilitate this conversation today, I have wonderful people that are doing credible work in subject matter. I have our first speaker who joined us from Tanzania by name Mr. Alexander Myra. Do I pronounce that your name well, Mr. Alexander?
Yes,
Myra?
yes,
Okay,
you are
very
right.
much. He's the managing director of A10 Energy and Real Estate Consultancy Limited. He has over 24 years of advisory experience spanning East Africa and United States across real estate sustainability, that is ESG, project financing, and investment due diligence. He brings a rare combination of ground-level Tanzanian market knowledge and US financial market experience to the question we are going to answer today: how Africa real estate system can align without leaving affordability behind. Then secondly, I also have Mr. Oladapo Rosewe. Please, do I pronounce your name? Is it Rosewe?
You tried.
Okay,
Yeah.
Mr. Oladapo, who happens to be our second speaker, is from Nigeria like myself. He is from Lagos. So he is the head of professional service and property risk intelligence at CW Real Estate. He spent nearly 7 years at Estate Intel, covering 9 cities across 6 African countries. This experience together give him one of the sharpest comparative lens on how African real estate markets are structured and where data gaps create risks and what the market intelligence infrastructure we still need to build. He holds a distinguished MSc in real estate from Halima, how far?
Yeah, I'm trying to get Layla on right now. Hi everyone, good afternoon. Please, I'm trying to get Layla, one of our speakers, online. Please just bear with me. I think she's having a network issue.
I'm not sure here. I don't know if you can hear me.
Are you here?
Yes, I'm here.
Oh,
Are you?
hi. Okay.
Mm.
Please, hi Layla. Hi, yes, Yunusa, welcome, Mr. Alexander. Please, can you switch on your camera, yes, Yunusa and Layla, so that it will be more clearer for me.
Sure. One second.
Sorry? Please. Okay, yeah. Hi, Leila. Nice to meet you. Nice to see you again.
Nice to see you too, Halim. Thank you so much. I hope you're doing well. It has been a minute. I try to make it a little bit.
Please, Mr. Yunusa, is your camera on? Mr. Yunusa, please, your camera on?
Yes, my camera is on.
Okay, my apologies, please. Hi, good afternoon, everyone. Welcome to another edition of Africa Real Estate and Business Insights. My name is Halima Aliyu. I'll be facilitating this meeting today before handing over to our host, AS Yunusa. As usual, the meeting is going to held for 1 hour, 15 minutes. And today we're doing a presentation from one of our speakers. Then after that, the audience will be given an opportunity to answer the questions. Our theme for today is Beyond Capital Availability, what actually makes Africa bankable at scales. So thank you very much, Leila, for honoring our and I will hand over to our host, AS Yunusa.
Thank you very much, Halima, for that opening introduction. Everybody, welcome back again. Leila, I'm happy to see you again.
Happy to see you too.
I have been following the wonderful job you are doing concerning calling attention towards African investment. So I used to drop my light so that you see that I'm seeing it.
Thank you so much. Thank you.
And on that reason, immediately I was notified that you indicated your presence today. I quickly said you should come and make presentation because attracting investment to Africa is your core area. And I believe you should be given enough time to make justification to this to this wonderful topic. For most of you that are joining us here for the first time, it is our honor again to welcome you to RAB. We normally converge every month to have discussions on African real estate and infrastructural development generally, not for anything but to bridge that gap of sharing continental knowledge among ourselves and also build people in this industry that will have the mindset we are building every month, irrespective of where you are joining from or where you are watching us. For those that are watching directly live from our YouTube, whatever knowledge you have here today, we expect you to put them into practice to make our dear continent, Africa, a great one. For also those of us that are joining for the first time, Leila is out there. She is the CEO of Muta Investment Limited. Leila, I got the name of your company well?
Yes, Muta Investment Firm, you're right.
Yeah, the Muta Investment Firm. She has over a decade of experience across real estate, mining, in fact, investment generally. Her core focus is in attracting investors to Africa. And it is our pleasure to hand over this session entirely to her because everyone out there is complaining of lack of capital. But people like Lila, she has been on this platform for more than 3 times. And she keep on emphasizing that we don't have capital problem. What we have is structure problem. And today, she is going to open our eye so that we can see truly, do we really have capital problem, or our projects are not bankable or investable enough? Leila, it's my honor to welcome you to the platform. Please, you can take charge now and do justice as required. Thank you very much.
Thank you so much, Yunusa. I really appreciate for always coming here to share my knowledge about capital, to share my knowledge on why investors should look at Africa as an opportunity, but not as a failure. So it's always an honor to be here to always honestly share my perspective on what I think about capital, but most importantly on what I think people should have a take on what it takes to interest an investor to give you capital. And I was so interested when Harima sent me a message on the topic, and I was like, oh, what a beautiful topic, because it's one of actually something that this year I've been focusing on, is to get more partners to bring more capital in Africa, both for entrepreneurs and government. And luckily, I think recently also I managed to get a mandate with a country of Guinea-Conakry, and we're doing amazing things with into infrastructure, mining, and all that. So at that said, really, I'm happy to be here, and everyone who is here, I hope I give you something that you can take home, especially when it comes to capital. Everyone is always interested to say, oh, how can I get capital? How can I get more money to scale my project? Everyone is looking for money, but the question is, how comes few of them really get the money? Is the problem the money that is scarce, or the problem is the people who don't know how to present themselves to get the money? Those are some of the questions that we have to ask ourselves, because, oh, thank you so much. I'm seeing the congratulations. Thank you so much. So to go straight, I've spent 7 years trying to connect investors to investment opportunity while providing funding. And recently, we have been also focusing on trying to get the mandates under the presidential offices to make sure we don't only guide entrepreneurs, but also guide countries in trade and investment, to guide them on where to get the capital, to guide them what is important right now in the country, and how do we elevate the seeds that we have to make sure investors are utilizing those seeds, and also the countries are seen out there. So to go straight on our typically, in simple words, of our topic is, how do we get capital? So let's see, but ask ourselves first, majorly, yes, you are looking for capital, but what is the vision of that capital? Because I've seen two people before. One, yes, they have the numbers, they have the structure, but they lack the vision. Then there's another one also who has the vision, but the numbers don't match. So the two of them, they all looking for the capital, but what they don't have is, majorly, when you look at them, is the structure. You have to understand that every investor is investing in people. Yes, you have had investors saying that we are investing, but most of the time when they make a decision to invest, they want to invest in someone who is behind the idea, because everyone has the idea, everyone has the great ideas, but few people would stand and say, I have this idea, and I do believe with this research, with these numbers, this idea can work. There are many factors that will help you to get the ideas. Of course, the numbers have to make sense. Those ones, everyone knows them. Of course, the market has to make sense. Maybe the country you are investing in has to make sense. The tax benefit, or ROI, the investment return, those are the key things that you really are needed when you want to get investment. But the key point is how you present your idea, because how you present idea gives you a possibility to an investor to trust you if they would believe, because now they are believing in you, not in the idea. If they will believe the person who is behind that idea is capable to follow up and also make sure their money comes back or their money increases, because that's the purpose of always looking for funding. You find that most of the time I've always had a lot of people in a real estate project. You find someone also has some energy project. But when you say that, okay, for example, some of the companies that we're working on with, it's USA capital, and you tell him, yes, they have agreed, or everything, the numbers make sense, they have agreed to have a conversation with you so that you can receive the funding. You find that the trouble now comes after their presentation. The people don't know how to present their ideas. They don't know how to structure their ideas to be attractive. They don't know how to, what to say. The numbers sometimes, they are putting the numbers of hope, not really the real numbers. And one of the things that you have to know about funders and investors, they really have their numbers right. They have done their due diligence. They have done this many times. They have lost money many times, to the extent they know what works and what does not work. So for me, I would say in simple words, not to waste much of the time. Make sure you you have structured the business. I think everything I'm saying, you have had it before, but it seems to be easy. But most of the time, you have to know that however much people still repeat things, it's the same thing. It's just a matter of you putting it in action. You structuring your business to make sure it's attractive to an investor. You having a vision as a person who is behind the idea, because people are going to invest in you, not mean, of course, the 20% is you, the 80% is the numbers, but that 20% is more important than 80% most of the time. Then secondly, when you look at Africa, some of the ideas work based on the sectors and also based on the country. So it's more attractive, of course, when you say, I come from Nigeria and I'm investing in real estate. Immediately investor, when the numbers, there are many numbers and structures that can back that, because Nigeria is known now to be increasing in real estate every day. The same thing when you stay in Uganda. The real estate is growing so fast, and investors, they know that, they have done their research. So you have to always make sure your vision on where you are heading, it's so attractive as much as your project is attractive. Yeah.
Leila, thank you very much. I pick a quote from what you just highlighted. Every investor is not investing in a project, they are investing in the people. That coincides very well with some of the statements I have given. Thank you. With what I took, note I took, for a project to be bankable, there should be a vision for that project. Also, you also said, aside a vision, there should be a proper structure, and both of them go hands in hand. Then, most importantly, there should be a good factor of communication, good presentation. So now, briefly, what I want to ask now is that we know the what. What are the type of structure do you believe a real estate developer should in case put in place to attract an investor? And before you start, congratulations on that, you winning, you just share with us. We are afraid you not tell me, if not before now. I will still follow up with you after the program. Congratulations. Please let us know what type of a structure a typical real estate developer should put in place for a project in order to attract a viable investor to such type of project. Thank you. I'll be listening.
Yes. The one structure, of course, you should put in place is to do your research on the numbers. Then secondly is to ask yourself, as a developer, okay, who am I really developing for? is it high class N? Is it medium class? It's a low class. But also, sorry for my language, you have to treat real estate as a prostitute. You have to have a vision on what you're going to do in 10 years. A lot of investors, a lot of developers right now, they are copy pasters. They see something the neighbors has done and they just want to do the same. But the question is, the structure that you are building right now, is it going to be making money in 10 years? Because you have to understand that if a funder is funding a project, they know that the only way to get their money is the future of that project, not now. They are investing the money now. They are waiting on the future on when they should get their money back. So you have to make sure as a developer to think twice, okay, who am I building for? Is the structure I'm building, is it going to be attractive for the 10 years client from now? Because it will be also absurd to be spending more than maybe 5 million USD on a structure. Then tomorrow, the government comes and say it's not good for the structures that we want for our city. That's a loss of money. That's a waste of time. But also, most importantly, if depending on the funding that you have required, there are a lot of funders, a lot of entrepreneurs request to be part of equity funding. Some request for the funding for maybe to be payable in 30 years, others 20 years. It depends on what asset they have that can help them to generate the money. But most of the time when you are looking at the structure and also what makes your development get attracted to a funder, one is always about the numbers. Two, it's always about who are you building for? Is the market make sense? Does the market make sense? What are the taxes that comes with that structure? What's the future of that structure, but also what's the future of the country? Because people are developing, and the only way to make more money in real estate, we know that it's more of increasing the rate, maybe 10% every year. But if your structure can't allow you to, to increase that 10% because someone else is building much better, we need also developers to be creative on what they do. I know it's easier to see something and tell your construction company and say, I want something like that. But you have to understand also people now are traveling. They are looking at their phones every day, what is happening, what is good. And I think I've seen one of my mentor is called Dr. Sudhir. He's one of the richest people in East Africa. And he's rich in real estate on one thing, because he has his own taste. And when he's building for 40 years from now. His structures, when you look at them, you're like, why is he spending a lot of money now? But he's telling you, I'm spending a lot of money now so that I don't have to renovate every day. So you have also to think about the future and who you are building. And of course, based on the class and the taste that you are building for, you have to be unique and creative. And all those uniqueness and creative, you may think that really comes on a client that you are building for. But for an investor, remember, they are also looking at to see if your structure that you are talking about is going to be able to stand for 30 years until they get the money back. So you have also to always think about it. And of course, measure, of course, on how you also present that structure. You have to speak like someone who have been there. You have to put your imagination there, because most of the time when you're speaking to an investor, they're like, oh, I've read through everything you said, but let me hear what you want to say. So the moment you open your eyes, the way you have structured the art of the numbers, it has to be different. You can't just say, I have maybe 20%. it's much better to say maybe I have 26%. It's much better to, so there are many tricky things, small things that you call small, but those are small things that brings an investor to listen to you and say, let me ask you a question. So where are you heading? What is happening after here? How are you going to be able to generate this money and pay us back with interest? So mainly that is depending on, I hope I answered your question.
Yeah, you answered my question very well. Thank you. Before I give you my own question again, someone from the audience is asking two questions. Number one is, do you train in project development presentation, or do you issue consulting services?
So far, we don't have an official training to train everyone who comes in, but one of the things that we do with our entrepreneurs who are looking for funding, we make sure we also, of course, they have to pay consultation fee where we guide them on how we are going to present their ideas to make sure they are fundable, and also to have to train them on what to do and what to say to make sure even if they sit with an investor, the investor is going to be able to listen and say, yes, I think your idea is incredible, but also most importantly, the person behind it is trustable.
Then the second question from him, the person that asked the question, please take note. You can consult her, or at least, consultation comes with a cost. She will guide you on how your ideas can be fundable. Then the second question is, do you have a link that you can share of various templates of project layout?
Yes, we do have our copy majorly. They are standard forms on what you need to do as a person. They are majorly simple. Of course, they're based on how much you are, the funding that you are requesting, but there are forms that you have created for everyone who is looking for funding. But most importantly, also to help them to understand what they need to do to get the funding. Yes.
Oh, okay. I have somebody that is interested in asking a question. His hand is up. Let me also give him time to ask his question. Mr. Alexander, you are highly welcome. He was part of our previous speaker in last month edition. In last month, we talked about how fragmentation among African countries is affecting capital mobilization, and he made a paper presentation in regards to that topic. Mr. Alexander, you can ask your question, please.
Good evening, everyone. Those who are in evening, I'm in East Africa. I'm in Tanzania. Thanks very much. Can you hear me?
Yes, I can hear you, Alexander.
Yeah. So thank you very much for a nice presentation. My question to you is, investors are so selective, and for quite good reasons. Investors cannot just dish out money to anyone, to everybody. So sometimes they go and set some criteria. So in Africa, the reason why most of the investors are doing that is because of risk. Not only risk, but also uncertainties. So my question to you, when you present a project to the investor, I know most of the investors, it's not one size fits all. What is particular project is structured in such a way it just fit for that particular location, for that particular country, for that particular portfolio, for that particular client base. Am I right or wrong?
Yeah, you are definitely right. Of course, there are risks, and also investors fear the risks. So one of the things, of course, we have to do, on our part, we do the due diligence. And one of the things of the due diligence that we do is to make sure either the client, for example, it's much easier to get a funding if you own the asset. It's much easier to get the funding if you have insurance. it's much easier to get the funding if you have of course, the reputation with maybe the banks, exchanges also, because those are the things also we have to do diligence on. Also, okay, this person has been working maybe with this bank account, with this bank brand. What is their relationship? How are they been managing to pay the money? So there are many structures of that. What helps you to get the funding, but when it comes also to the investors in the African market, they are more selective on the countries. For example, when you are staying in Tanzania, right now, a lot of investors are more willing to come to Tanzania to invest in gold, in mining, especially gold, because right now Tanzania is building a safe space in gold. They have built systems, the systems that helps the local market, but also the systems that helps an investor who is coming in. Also, you find that some of the countries like Rwanda or Ghana, Accra, where they are, and of course you can't forget Botswana, where they've managed to build those systems that helps investors feel more safe before actually they see the project. For example, if I tell someone, oh, I'm coming from maybe let me say Guinea Conakry, and the history of Guinea Conakry, even if they are trying to come up and trying to put themselves out there, investors will pull out. The due diligence has to be more than numbers. It has to be more than emotion. They have to push to make sure they feel safe. Then secondly is if I invest, they will always ask this question: if I invest in that country, how easy is it to remove my money back? Especially those investors who invest in equity. What if I change my mind in 5 years from now? How easy is it to move my money back? Because a lot of countries also, you find that it's easier to invest in, but it's not easy to move your money back. So those are also some of the challenges. And from the due diligence background that you always have to do, you find that also investors are looking to understand the past of this person that they're investing in. Okay, what are other businesses that have been able to handle? And also, especially when it comes to those investors who are looking for funding, which is maybe equivalent to 100%. As I mentioned, that if you have maybe you own the land that you are looking to develop, if you, of course, you own all the certificates and the licenses, it's always much easier. But of course, some ideas are attractive, are even easily fundable. Others are not. Right now, a lot of family investors that we have right now on our table, they are more interested in investing in energy sector. Others are more interested in investing in buying licenses with the country, because they feel they rather trust the country than trusting partners. So it depends, but also the funders itself, where they're coming from. It's much easier to convince someone from Canada to invest, and the due diligence is minimal, than asking someone from China or India to invest. And all those are also our investors. So it also, based on where they come from, the relationship also we have managed to build, it's always much easier to understand based on specifics of the sector, the country, and also the project and the person behind that project.
Okay, thank you very much for providing answer to that question. Leila, recently I wrote a book, Investment and Property Development.
Oh.
The book normally, he talks majorly on Nigerian built environment. Maybe let me know how I will get a copy across to you. So the question I want to ask that the argument I made on the book is that investment follow policy, capital, and execution. So I try to look around that for you to unlock massive property development, these three things need to work hand in hand. So in your own experience, how do you think policy At what extent do you think policy affects investors' confidence in any country, Africa generally?
That's a great question, because the policy, it's the most important thing that everyone who, even entrepreneur, even the local entrepreneurs, they are always questioning it. I would say, for example, recently we had a lot of, we had a meeting with entrepreneurs. Most of entrepreneurs were people who are investing in tourism, especially hotels and lodges. And you found that all of them, they were complaining about the taxes that comes with owning a hotel, complaining about the 18 VAT, the 15 taxes, I think also 18 of the tax on the hotel profit. So all those things, the structures or how the countries structure themselves, you find that it affects a lot for the country, because it's the first decision everyone wants to, when they're making, when they're funding, the first decision they want to do is to make sure they fund in a country that is safe for them to protect their money. And if the structures are not favorable to the person or to the investor who is investing the money, it's always going to be a problem, to the extent where they feel, I'm not safe to put my money there because there's nothing that is favoring me. So it matters a lot on what the structures, the countries, and also in general, what the system line they put for an investor who is going to put the money in. If it's not going to help them to save their money or to protect their money, of course, an investor is going to definitely say, no, I can't trust that country. And that's why a lot of, you see a lot of investors right now, South African investors and investors from USA, they are investing in Rwanda, not necessarily because they are going to be having high profit, but because they know that their money is safe.
Okay, thank you very much. That means you also buy the argument that policy stability creates investors' confidence.
Definitely, it's the most important thing. If the country is not protecting the person with the money, then the question is, who are they protecting? And also, if I'm investing my money and I know that it's not safe, why will I invest there in the first place? Yeah.
Thank you very much. Part of the argument I made in that book is execution capacity, that the people that manage the money, their capacity is also part of the things that fuel investment. Their capacity is what fuel investment in built environment. So do you also agree that execution capacity can accelerate investment to either a company or a nation?
Yes, definitely. Some of the challenges that I usually have is that someone will come and request for the funding. Yes, everything is well, we've managed to get the funding, but after the management of the funding becomes a problem, you find that he feels like his car is too old. He chooses to buy a new car in the money that he requested to invest in the business. You find that, oh, something came up with the wife and he has to solve it with the money he asked for funding. So there's also still issue of the mindset in Africa of entrepreneurs to understand that there is sacrifice that comes with when you have someone's loan. There are things that you can't do. That money, it should not be the money to enjoy yourself. Actually, it should be the money to make sure you make more money and pay someone's money. So there's still a problem of especially also when you look at the future, you find that someone is getting they have started a business, the business is working, but you find someone doesn't know how to save, or because the only way that you can pay back that money, you have to make sure you save that money, you save the money, you have to make sure you invest that money. And most importantly, also the structure on how you plan how to use your money is also important. So those are some of the challenges that we always have, is the mindset of entrepreneurs who think now that they have this loan and this loan belongs to them, and they start using that money with anything they have. And when the time comes, you find that some of them they're having strokes and had issues because they did not manage that money before.
Thank you, Laila. I will keep on. I want us to look at one very important data now. In Africa, we have almost $1 trillion debt capital. What they call debt capital is the money we could not unlock. And African Development Bank says that Africa have about $165 billion in pension funds and other social funds that people should be able to have access to access. But the problem is the debt capital tying down these properties are not regularized. Last year, I don't know if you remember, we also discussed something like this. People have lands that doesn't have title. Such land cannot be used as collateral to collect loan, which is a capital slipping that cannot be. So what do you think we should do?
I think, of course, on that question, there are things that we can control. There are also things that we cannot control. One of the things that we can control is that if you have an asset, it's, for example, as a land, you shouldn't treat it as a land. You should treat it as an asset. When you have an asset, you don't just throw it out there. You have to make sure you get the licenses on that asset. You have to make sure you have the paperwork that shows that that's your asset. And of course, also the system of African, some of the countries are still struggling to make sure they create systems that are going to be easy for someone who owns maybe land and all that. And also we still have issues of family issues. You find that, yes, you're going to register this land, then tomorrow your sister comes and say, that's my land, and that becomes a trouble. And the courts of this African market also, they may take 1 year to 3 years. So there are many things that really that's cause that. There is corruption. I think recently we had an issue with one of the friend that I know. He had everything that shows that the land title and all that, but someone managed to pay the money and they changed the titles. We still have issues of corruption. So there are things that we can not control, but also things that we can control. Make sure you register that land title, make sure you have the permits on your land title, and also make sure you don't sit on it so soon. Because, like, for example, in Rwanda, there's some location, if you have a land and it's not built, less than 2 years, the government has to take it. Some of those things are pushing people now to develop those lands. So there are many ways we can solve that. But of course, if something you can control it, make sure you do it. Some of the things that you can't control, there we have to still pray for Africa. But I feel like some of the things we are getting there.
I'm taking note of one important point you made there, which brought us back to the issue of policy we talk about. You give an example of Rwanda, where if you don't develop, the government take the land from you. So which come from policy and execution, because the policy might be there, but the capacity to execute is also another thing. And for a country like Rwanda has always been in a good book of, anytime we talk, we have this discussion, we have a lot of case studies from Rwanda, and which is very good. If government can pass policies that force the citizens to unlock this debt capital, I believe this morning, Mr. Hans, thank you very much for coming. Mr. Hans was also at a point, he
came on this platform to share his knowledge. Now, we have a very good question for you, Leila. Today, you know, it's about money. We are all very much interested. The question is, how can we make mezzanine funds available for emerging developers who don't have the track record yet, but are supported by a very experienced developer team?
I think for me, it will also, I would say that instead of looking for a full funding, look for an equity or look for a partner. And I would say that actually before we outsource the capital from investors, let's learn to outsource the funding from people that we know. I've seen many times. I was actually speaking to also a good friend of mine. He's called Mugabe. He's developing a mall. And recently, when we were looking for the funding, I told him, let's look for 50% of equity. We bring some companies called US Capital Global. It's well known in funding and equity. I brought them on board. Then he asked me, where are we going to get another 50%? And I told him, let's sit down. Give me people that you have on your list. Already he had more than 5 people on his list. People that we managed to raise money from were his friend. And we managed to get actually over 76% of the money that we are requesting from his friends. So I would say that sometimes when it comes to the money, we have the project, we have this idea of I want money. So sometimes that fear and also that urgency makes you feel there is no other way, but you have to first stop a minute and say, okay, what happens when I ask for a full funding? The truth is, if you don't pay, you lose everything. What happens if I request maybe 60% of equity and I make sure I have 40% or I make sure I raise 40% from people that I know or from the local people that I can easily access? The answer is you have the control. Second, you will easily be able to raise that 60 or 70% because you already have the foundation. Everyone, when they see someone with a little bit of the money, they also know that you are interested in your project. You're not willing to lose 40%. So majorly, when you are looking at the problem of looking for the funding, let's also start by sit back and find a solution on what we can start with. What can you start with? Because the issue is also our bank systems right now in Africa. They're still killing us. You know, they still have to pay more than 16% of interest rate on the money. And there is no backing also effort to make sure we raise or have the asset to you find someone else, actually they don't even have the assets to make sure they can get that funding. So majorly that is it, but I would say before you quickly run to ask for money from outside, first think out how you can outsource the money from your circle.
Thank you very much, Leila. Is there anybody that still have any question? Because I have stressed her too much today. I know this is her area of expertise, and I actually enjoy having this one-on-one discussion with her. So in the absence of any questions from the chat box, Leila, what did you, are you going to charge us with? Like now, what one action for everybody that have listened to you that knows that beyond capital availability, what can we do to make our projects bankable, to attract investors, to make ourselves ready to be invested in? What one thing do you will you tell us to do as your closing? What do you want us to do?
You have to learn how to sell yourself. Honestly, that is it. Because yes, I can actually be easier to say I have I have a partnership with this company. We have partnership with another company. I can easily outsource the capital for you because your project is attractive. But can you make your project attractive? Can you attract yourself people to believe that you are the capable person behind that project? Because most of the funders, they fund the money, but they're not going to manage that money. So you have to make sure you learn how to sell yourself enough that if everyone hears what you say, they have confidence in you and they have confidence in your project.
Thank you very much for your time. Thank you for always coming to African Real Estate and Business Insight to share your knowledge with us. I think at this point, you have to join the board of this African Real Estate and Business. What do you see about it?
I will look into it. We will talk about it.
Please, let's talk about it. As it is a high time you join us in pulling these conversations together. I really appreciate your time and I enjoy this conversation we had this evening. Have a very wonderful weekend. So at this point, thank you everybody
I'm seeing someone raising a hand, Engineer.
Okay, Engineer Rekia, please, your hand is up.
I'm so sorry. I've been in a noisy place. It's just now I am in a place where I feel I can talk and you guys will hear me. I want to actually commend this beautiful lady here. She has done justice to all of the questions you asked her. Thank you so much.
Thank you so much, Engineer. I really appreciate it.
I just want to say, like where you said there are investors who are just more comfortable with the certainty that their funds are safe, and then they are not that interested in a very huge profit, even if it is small. Well, I think that is a good one. But what do you have for investors that are interested in having it both ways? Making sure that their funds are safe, and secondly, having a high margin on whatever investment they're into.
Okay. Now, yeah, mostly, I think I would just say personally, whatever the challenges that I've been having, actually to make sure investors get projects that are safe and also backable. You find that, yes, especially even if there's a project from someone, the logistics and also the politics behind may cause this person not to get the money. What do I mean by this? We have seen many times where we get an entrepreneur, they have this idea or they have this massive project. We reach it, when we're getting licenses, someone there, a minister or someone just say, no. You find that now the issue is not the project, it's not the person, it's now someone who has the power to say no. So some of also the things that I have to put in place is to make sure I don't rush to be in every market, but also I try to choose the right markets in Africa, because in 54 countries in Africa, there are few markets right now that you can be easily say this country is safe, but also it's bringing the interest rate. And when you look at that also, there's no way one country is going to have every sector to be the same level. What I mean as where you find that every sector is when you invest this amount, you're going to get maybe 20% of the profit. It's not going to be possible because some of the countries are very making a lot of money in real estate. You can get your return in real estate. Others you can get a lot of returns in agribusiness. Others you can get a lot of returns when you invest in tourism. So those also you have to sit down and do your own research. It's not only the research, you have to be on the ground. And I think some of the things that have served me to save the money for my investors is to make sure I go on the ground. I speak to the people, I do my own research, but also to what has also helped mostly is to always make sure I have this strong partnership with the country that I'm working with. And that's why the mandates are the mandates that we have in trade and investment. It's not only to work for the government, it's also to work for our entrepreneurs, to make sure anything that happens, we are on the top. We are working with the decision makers to make sure everything is okay. And I hope I have answered your question, but for an investor who is looking for both, we need to have to first do the research based on the project that you are doing, because there is many factors on why you may have money to invest and you are looking for the interest rate, but why you are looking for the interest rate is not the right money for you.
Okay. Thank you so much for that response. Thank you.
You're welcome.
Thank you.
Okay, thank you everyone that has participated on this month edition. If you want to have further conversation with Leila, I just share her LinkedIn profile here on the chat. She is very active. Once you message her, she will respond, and every other question you have, you can follow up with her. Leila, as I said earlier, thank you very much. Please quickly reconsider my request so that we can broaden this our conversation across Africa continent. We have 54 countries, and we only 20 has graced Africa Related and Business Side. So I know with you on board, we can, as quick as possible, cover more African countries. So at this point in time, thank you very much. Halima, you can now take over to you. Over to you. Halima, are you still there?
Yes, I am. Thank you very much, our Miss Leila and AS Yunusa, and our last speakers that attended, which is Mr. Alexander, Mr. Hans. I really appreciate you honoring this seminar today. And our audience for taking your time to attend this seminar. Thank you. I really appreciate it. As we look forward to our next edition next month on the 25th, please follow EasyNet Global on LinkedIn and Arabi on LinkedIn to stay updated with our seminar. Thank you very much, Leila. Thank you very much, AS Yunusa. Have a wonderful day.
Yeah, thank you so much. Have a good one as well.
Thank you, everyone. Leila, how can I get a copy of my book across to you?
Let me think about it. I'll text you straight on WhatsApp. Is that okay with you?
Yeah, fine. That's fine.
Okay, thank you.
Thank you.
Thank you, Leila, for your presentation.
Oh, thank you. I really appreciate it.